Hey guys and gals, Kevin Bupp here. I've got some very exciting news I'd like to share with you before we jump into today's show. Now, after closing on Fund 4's first acquisition of a $50 million institutional grade mobile home park, we're adding a second irreplaceable piece of real estate to the portfolio, and it's coming into the fund with over $1.5 million of built-in equity for our investors day one. Now, when I say irreplaceable, I really do mean it. I mean, this is an affordable yet high-end waterfront mobile home park located in the Columbus, Ohio market. Quite literally, every single mobile home on this property is right on the lake, each with its very own personal boat dock, meaning a very high demand for affordable weekend getaway options, as well as year-round housing for working Americans. This is a true unicorn of a property, and you will not see another one like this come around again. It really is a one of a kind. A few other aspects worth noting. This park is producing stable and predictable cash flow day one. We're acquiring it with an excellent in-place Freddie Mac loan at a 3.3% interest rate for the next 8.5 years. This also includes a period of interest-only payments. Again, the simple supply and demand dynamics here are enough to get excited about. This is affordable lakefront real estate for both the working American families as well as folks looking to lock down a reasonably priced waterfront escape. Don't let this opportunity pass you by. Visit investwithsunrise.com to register for our webinar and learn about all the wonderful aspects of this property going into Fund 4. Again, that's investwithsunrise.com. Now, let's get on to the show. Hey guys, Kevin Bupp here. I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is real estate developer Dale Wills. Now, Dale is the owner and founder of Centra Capital Partners, a ground-up single-family development firm based out of the Twin Cities. Since starting the company, he has overseen the development of more than 1,500 homes across 50 projects, totaling more than $500 million in project value. The Centra Team controls the developments from start to finish, leveraging its industry experts to source, entitle, build, and sell each home, which allows them to control costs, control risk, and adhere to the schedule. So, guys, without further ado, I'd like to welcome Dale Wills to the show. Dale, how you doing today, my friend?
Kevin, good. Thanks for having me.
Excited to have you here. Excited to talk shop with you and learn a little bit more about Centra Capital Partners and actually all the different products. You've got your hands in a number of different pots. And so excited to get to that part of the conversation. But before we go down those rabbit holes, let's back up a little bit. I gave you the brief introduction. I know there's a lot more to your story. So maybe take a few minutes, tell our listeners a little bit more about yourself, your background, and how you found your way into real estate.
Yeah, Kevin, you and I have a lot of similarities in our backgrounds. Started businesses at a really young age and just love making things happen. For me, I started selling pigs. I think it was at 8 years old. I was raising pigs and selling the pork. And that was kind of my first entrepreneurial adventure. And, I've worked for people for a W-2 off and on here and there, but it's just not nearly as fun as making things happen. And, So I've spent some time in California. That's where I grew up, and then did some real estate and banking in Nevada and Utah, and we're based right now in Minneapolis, and been all over the board. We've done banking. I've been involved in banking for the real estate sector. Worked in on a project that we built a city from scratch. Created the water system, the sewer system, the golf course, everything. That was a lot of fun. And as a company right now, we do some apartments. We're not doing any right now because we're not seeing the opportunities that make sense. So we're primarily focused on for sale housing. And we do have a little bit of commercial properties as well. And then recently, about 6 months ago, we started a real estate capital fund that we're allowing people to invest sidelong any projects that we have with us to build wealth for them. And right now it's being all for sale single family housing.
Got it. No, I appreciate that background. So, just from I guess, pig farmer to banker to real estate development. So let's talk about maybe the pivotal change from being a banker, getting into actually development space and actually starting your own development firm. I mean, that's well, I guess W-2'd, maybe that was the banker. Maybe that was a role as a banker in your adult life. And then ultimately at some point in time, you stepped out on your own. Tell me what that looked like. And I mean, tell me what really pushed you to do so.
It's interesting. Mine's a little unique. You get a lot of stories of entrepreneurs and there's just a hunger and a drive. And for me, most of the deals I've done was really out of a necessity. It was, I did banking, I did mortgage banking for a while, then I did development and construction banking. And there was a developer that approached me that we were doing loans for, and he enticed me to come work for him. And so went and we had a lot of fun. We did a lot of great things, and ended up leaving that company. And I goofed off for a period of time in owning Radio Shack franchises.
Interesting.
And yeah, it was kind of interesting. It wasn't really fulfilling, for anybody that's listening that's actually been in a Radio Shack. They've been a
I've
while,
got
but
good memories. I got good memories as a kid. Used to ride our bikes up to the Radio Shack and see all the, the remote control cars or
yeah,
whatever the latest stereo was of the year, whatever, Christmas time they come out with special things. And so anyway, I got good fond memories of Radio Shack.
yeah, it was a good adventure. And I learned a ton from it. And I'm glad that it's in the past. For me, one of the things I love about real estate is you're making a difference. You're impacting
Mhm.
lives for good. You're creating something that's going to last for generations. Whereas Radio Shacks just weren't quite satisfied because nobody really needs the remote control car. Nobody needs that battery. The
Sure.
stuff that we were selling, there just wasn't a need. It was, and so, I left from that, had an opportunity. That's where we were building this city, and then had an opportunity to start a home building company. Um, and did that. We ended up selling that company. I went to work for a national home builder, and then the market falls apart. Starting in '06, we all talk about '08,
Okay.
but it's like, it really
Yeah,
started in '06.
it sure did.
And so that fell apart, and then it really came down to, what do I do? I felt I was unemployable at the time.
Mhm.
There was my skill set at that time. Nobody wanted us because nobody was doing anything. I said, well, I got to go start our own deal. And what was really fun about it, so it was really out of necessity is why I had to do it. But what was fun is we saw some opportunities in the distressed assets and started working
Mhm.
with banks and helping them work through those assets that they had, because the banks owned all the assets that were worth anything.
Sure.
Developing any new project didn't make any sense. So we worked with banks for several years, and then just time accelerates, and obviously we had to stop working with banks because they ran out of assets, and started doing new projects.
Well, that's fantastic. That's exciting. I guess, obviously timing is everything. What seemingly was a challenging time and a moment of distress even for you and your personal life turned into, opportunity on the flip side, right? So it's like, one door closes, another one opens, right? Just always,
Yeah.
always be open-minded, have your eyes wide open, and opportunity. It's always in front of us, right? It's just whether or not we're willing to actually see it or look for it. And so that's exciting. And so you started your development firm at one of the most challenging times in history. And so, you've done a lot of projects since then. So talk to me about today. What does today look like? The different aspects of your business. I know Centra Capital Partners is a fairly new endeavor, but more specific, like the company as a whole, the business model, what's your bread and butter? I know it's single family home development, but are these starter homes, like first time home buyers? Are these, high end luxury homes, or is it down the fairway in the middle? Again, what is it that you build? What do you love to do?
We I mean, what we love to do is we just, our company motto is, we improve everything we touch.
Hmm.
And that's just the philosophy, whether it's people that are working with us, trades that we're working with, the community, the development. But the market we're in a unique space. We can look at the late '70s, early '80s. There's some similar parallels, but quite different at the same time. And we were really fortunate. We built all over the board. We don't do custom at all. We don't do high end anything. But we do, homes that are second, third, fourth move up products. We do product that is for empty nesters that's tired of the stairs and want to have everything on a single level. We've got first time home buyer product. So we've been all over the board. Right now, we're really focused on first time buyers. The interest rates being up has just really made it hard. We're at a record high of lack of affordability, and then the interest rates have climbed. Now, in the history of things, the interest rates really aren't that high.
Right.
However, when all of a sudden we're at a 3% interest rate and now we're jump up to 7, and then we had houses that 5 years ago were selling for 300 and now selling for 500, it
Mhm.
really pinches everybody. And so we're really focused on that first time buyer because that's, there's still a need for housing out there. They could just afford a lot less. And, we like to look at it. You take a funnel. Well, the beginning of the funnel, there's a lot of people that can afford that $300,000 house. As you go down the funnel, there's a lot less at 500 and a lot less at
Mhm.
six. And so we're really focusing on that beginning of the funnel because of the interest rates where they're at and the dynamics of needing housing.
So what are there any specific pivots that you made inside the organization to help you navigate these challenging times and turbulent waters that we're in, given rates are high, obviously home sales are down. What are you guys doing?
We did, it's interesting use the word pivot because internally we call it the pivot plan. And so a couple of years ago, we pivoted and said, how do we become more efficient? It, what started it is in the industry, if you have an 80% customer satisfaction in new home building, that's pretty good. It sounds horrible. That means 20% of your people don't like you. But in the industry, 80% is pretty good. 90% is really tough and almost unachievable for a lot of builders. There's builders that do it, but it's really tough to get a consistent 90%. Well, we said we're going to be different. We want to be 90%. And so we would send surveys out at different stages of construction. And no matter how hard we tried, no matter whatever we did, we couldn't get to 90%. And it just got so frustrating. We said, okay, what's driving this? Why can't we get there? So we dug into the information. And an interesting thing we found out, the more options a buyer picked, the less happy they were. Then it accelerated if it was an option they didn't physically see.
Hmm.
So if we have a model home, 80% of what the buyers picked, they saw in the model home. So if I'm picking 100 different selections, 80% of them are things I'm physically seeing in the model home. The other 20% are either items I physically see. Here's an option of a different fireplace, or an option I'm seeing in a catalog of here's the other fireplace. If it's an option they saw, the more they selected, the more dissatisfied they were. If it was an option they saw in a catalog, it exponentially got worse.
Mhm.
But interesting is you look at it, you go, well, they pick 80% of the same things that they see. And we looked for what are the patterns? What are the patterns they're picking out of the catalog? What are the patterns and we couldn't see a pattern. And so what we did is we said, let's pivot as a company. So we offer no options anymore. There's
Interesting.
zero options because they're picking the same things anyway. Why do it? And so we go in and we say, we're building this house on this lot, and this is the color scheme. These are all the options, and that's it. And we get a lot of pushback. Says, well, that's boring. Your house looks same as the next door neighbors. Not really. How long does it take before you paint accent walls and your furniture's
Yeah.
different? You make it unique to you. So we did that. We got rid of all of our model homes. Said, well, if they're picking the same thing, why do I need to have the carrying cost of a very expensive model home? And then we found with our trade partners, if we're building the same things over and over, your risk of error goes way down, which is money. Well,
Yep.
now all of a sudden, if I say, hey, Kevin, I want you to do 100 homes and they're all going to be black shingles, well, you can do pretty good because you know exactly what you need on every home because it's the same thing over and over. And you can now buy your shingles at a better price because you're doing 100 homes of them. And that goes with all of the trades. So we shifted, we found our customers were happier, but it also benefited everybody. Our sales agents were happier, our trade partners were happier, everybody was happier. And then we were able to take those efficiencies and drop our prices, which then makes your customer double happy. And so it was a big risk. We were really nervous about making it because it was just fundamentally we changed everything how we operated on
Mhm.
selling houses.
Have you seen any competitors follow suit and make that same change of not offering any options? Or are you or are
There
you or,
are
or are you
across
the
the
anomaly?
nation. There are some across the nation. Detached single families, I don't know. Certainly there's somebody out there. I don't know of anybody that follows that exact same model. I do know of people in the townhome and condo market. There's quite a few that follow that model. But a
Sure.
detached single family, there's companies that try to do it. We've just gone the extreme.
Hmm.
I mean, we jokingly say, as an example, you can pick whichever countertop you want as long as it's the one I offer.
That's great. I
And
love that.
so, there's literally no option. So there's some builders that have tried and said, okay, you can pick package A, B, or C. We just said you could pick this house or not. That's it.
So,
And we
so have you found that being that you've been able to lower your prices a bit or keep them lower maybe than the competition, has that allowed you guys to navigate through some of the turbulence with the higher rates and lower home sales a little bit better than your competitors? Have you
yeah,
noticed that?
we don't do a build job, meaning if you come in and say, "Hey, I want this house on that lot," we just don't do it. Everything's on
Okay,
speculation. So
got it.
everything we start does not have a buyer.
Hmm.
And up until recently, like 3 weeks ago, we didn't even put the house for sale until we were framing it. Now we'll put it on the market as soon as we have a permit. But in the last 7 months, we've had one house get finished before it was sold. So everything is selling because
Hmm.
there is a demand, there is a need. We just had a company-wide meeting, leadership meeting yesterday about, well, how much more aggressive do we get? Because I'm watching the next 6 months. The market could be slow for the next 6 months. People people fear uncertainty,
Hmm.
and I don't know that whoever's president next January is going to really affect housing. There's still a need, but the uncertainty worries people, and so they sit and they wait. And so
Hmm.
we're seeing the next 6 months. So there was a lot of discussion of how aggressive do you want to be on building homes that aren't sold when you don't have a buyer if the market slows down. And so there is some risk to it.
Have you actually lowered your production volume in the past year and a half since rates have gone up, or has it been mostly the same?
No, it's mostly been the same.
Wow, that's
It's
great.
it is still cyclical. When we see interest rates jump up a little bit, the buyers all freeze because of the uncertainty. And so they
Hmm.
sit on the sideline. And it's just not us. This is nationwide. And so the rates jump up, everybody sits and waits. And so you'll see sales will stall out for a period of time. And then eventually the buyers are like, okay, this is our new reality. Let's go ahead and buy. And then they come back.
Hmm.
If the rates continue to slowly climb, that uncertainty will last longer. If the rates come down, then they're like, oh, there's still some uncertainty. It might come down some more. And so even when they come down, the pause is shorter, but there still can be a pause that the buyers are waiting, going, oh, hey, they just came down a quarter point. Let's wait and see if they come down, a full percent.
I don't follow statistics here, but has on a national scale, has the production of new home builds has it gone down in the past year and a half since rates have gone up?
Entry level have gone up. The more
Okay.
expensive custom stuff has gone down.
Okay, I'm just wondering from like where I was going with that question is has there been any opportunities created for your company as far as like land acquisition opportunities from maybe builders that just decided, hey, we're not going to move forward with that project on those 40 acres, or to where literally they're exiting out of projects and never really got going. Maybe it's internal, maybe they're reallocating equity in different places, what have you. But has that created has the environment that we find ourselves in today, has that created any opportunities for you guys to buy?
We were really hoping yes, and the answer is no.
Okay.
We did for a very short period. During some of the time in COVID, there was a lot of builders that were canceling deals.
Hmm.
Further we get removed from that, we're not seeing it. It also depends on the market you're in. As you
Hmm.
get into markets that aren't dominated by publicly traded builders, there are greater opportunities. When you get in the markets that are dominated by the public builders, it's harder because they're answering to Wall Street.
Yeah.
They're still working on bonding money that was at 2%, that's still out there, and
Hmm.
3%. So, they're playing with different rules. And also,
Yeah.
they've got to put up volume. And Wall Street is saying we've got to see that volume. And so they're
Hmm.
also willing to work for a lower margin. Whereas us, we already know how to build houses. I don't need any more practice. So if we can't get a decent return, then let's just not do the deal.
Hmm.
And we're in the Minneapolis market we're in, there is quite a few national builders. And so that does drive it. You go to a market like a Kansas City market, they've only got one national builder there. You go to the Omaha market, there's zero national builders there. That does open up some opportunities for the land versus the larger markets, that's got, the Phoenix market or the uh, Orlando market where there's tons of national
Hmm.
builders.
So I know a lot of a number of the national builders have ventured into the build to rent space. It's a hot sector, has been for the last 7 8 years. Is that on the radar at all for Centra? Have you guys considered doing a build to rent model?
Yeah, we were slated to do 150 units last year. And the infinite wisdom of the Minnesota legislature had a bill that was proposed that would make it illegal for an LLC to own a house.
Oh boy.
And it was just like, well, I'm not going to take that risk. And
Yeah.
so we actually lobbied it. We stalled it out. A group of us, not just us, but we got it stalled out. It came back this year. They did pass it this year, but they did a carve out for builders. If you're building it for that intent, then we're exempt. So I can go build one and keep it, or I can build it and sell it to you, and you could have it as a rental. But because of that, we stopped. But we're looking at several markets of doing the build for rent model. We're looking at the Kansas City market, the Des Moines market,
Mhm.
Indianapolis. We see several markets that there's real opportunity for that, because you are correct. There's several nationals that are doing it all over the place, but
Mhm.
there's some of these markets, like the ones I just stated, that are being overlooked. The nationals are hitting the big markets that have the highs and the lows. And I like the markets. I'm happier with the single than the home run, because if I'm swinging for the home runs, I also strike out more often.
Yep, that's correct. That's correct. So, well, to that note, I mean, what are you most excited about over the next, call it 3 to 5 years? I mean, from a company perspective, personal perspective, like what, again, given where we're at today, looking ahead, what gets you excited? What gets you out of bed and just jumping in the air?
We love making a difference. And
Yeah.
and there's nothing funner than going into a community that you said, yeah, we did that.
Hmm.
You go to a community that you built 5 years ago, and the trees are maturing, and the kids are out, riding bikes in the sidewalks, and people are living there and thriving. I mean, that's just, I love it. I love making a difference that matters. And so we're really excited that we're just increasing our footprint, to start hit more markets. And then the capital raise, you know, the story of the capital raise actually started a few years ago, because one of the things that we offer our employees is they can buy houses at cost. They're allowed to
Oh, that's
buy
great.
them so frequently.
Yeah.
I've got an employee that he does this regularly, and he turns them into rentals. And so he's got a pretty good sized portfolio of rentals
Good for
that,
him. Yeah.
I don't know, he might be making more money off of his rentals than he is from us at this point. I don't know. But the tax code is very unfriendly to him,
Yeah.
because he's a W-2 employee. So I get all these great tax benefits that he doesn't get. And I'm like, this is just not right. How do
Hmm.
we fix this? How do I give him the same opportunity to build wealth at the same rate I am? Because I've got an unfair advantage. And that's actually what evolved to eventually we created Centra Capital Partners to allow the employees to invest in what we're doing. We said, well, let's just open up this to anybody. Let's anybody that wants to grow wealth alongside of us, let's do it together. We're really good at what we do. We know what we're doing.
Hmm.
We make a lot of money at it. So let's let other people in on it. And maybe we can just do a little bit more with extra capital and grow this thing. And now a lot of us can make money versus a few of us can make a lot of money. So we're super excited about that.
Are there any open opportunities right now within that fund?
Yeah, we do. We've got two that are open right now. We did it a little bit different. Most funds will create a fund and they'll say, okay, it's a $30 million fund, and we'll bring in multiple different assets into that fund.
Hmm.
We did it a little bit uniquely, and we said we're going to do it based on project. And so somebody can say, hey, this is an 18-month project. I want to be in and out pretty quick. I don't want to be stuck. So they can pick a shorter term project, or a project that might be a 5 year deal. They can be in a little bit longer. So we thought it would give a little more flexibility. And if somebody says, hey, I want to be in all of them, well, put a little bit in all of them instead of a lot into one of them. And so that's why we chose to go that route. So we do have two projects right now, that are open, and we've got, one of them's almost fully subscribed, and we've got another project that's coming online, here shortly. Actually, we've got 6 new projects that'll be coming online in the next few months that we'll introduce to this.
Are they equity, or are they debt, or are they a mixture of the two?
So we do go get institutional debt from regional
Okay.
banks, and then the investment partners that invest with us, it's equity. And so
Got
we'll
it.
go get institutional debt somewhere between 60 and 75% loan to value. And then we're putting in, and then, you come and put money in, and you're
Mhm.
actually an investor. You have ownership in the project. And so that's a little bit unique. Somebody's doing it out there. I just don't know who else is doing this
Mhm.
model. how often can you invest and be part of a company that's doing for sale housing and
Yeah,
be an
I don't know
owner
of
in it?
one. You're right. You're right. Absolutely. So what does that look like? I mean, just give me the general overview of the term. Is there a preferred return, and then is there a waterfall structure in place?
Yeah, it depends on
Um,
the project. There's an 8% preferred return that the
okay.
investors get. And then there is the waterfall. We pay back the institutional debt, and then it's the preferred return, and then it's the split between the partnership, which is partly us and anybody else that invested in it.
Hmm.
So it does take some time versus if I'm going to invest in an apartment complex that's built or a mobile home park that's built, I should start seeing returns fairly quickly.
Yeah.
Whereas in our case, we've got one project that's a longer term project of those two. We're going to build 105 houses that are for sale. And so you invest today. Well, I've got to still put that first phase of development in.
Hmm.
Then I've got to build the homes. Then we've got to close. And so, you're really not seeing any returns in that particular project for about a year. On the flip side, you're getting a pretty strong IRR. On the downside is if you need residual
Income.
income from the
Yeah.
investment, we're
Yeah.
not the investment for them. But if you're
Right.
looking, to be able to put something in, another interesting thing we did, we just partnered up with a IRA firm. And so people can also invest their IRAs. Because we thought, well, that creates another dynamic for those that, okay, I can go park three, four, $500,000 into this investment and get way better. I don't know about you, but I'm a terrible investor in my IRA, and it's
Yeah.
liquid more
I
often than
should
it's
I should
invested
I
because I'm
shouldn't even
clueless.
admit it. I actually am too with my with my more of my wife's IRA. But yes, I agree.
Yeah, we offered this up, and immediately I transferred all of my wife's and my IRA and said, "Well, I know that we're successful here, but I have no clue which stock to invest in and who I'm going to lose money on this week."
It's funny. Yeah, I mean, actually, most of our IRAs back in our various different funds, or like my wife's IRA, like I think all of it's all back in, but just recycling it on a regular basis. Yeah, we're not as on top of that as probably what we should be.
Yeah, that's my dad came to me. He's retired. He's 82 years old, and he said, "Hey, I want to invest my IRA." I'm like, "Well, we're family. Is that a great idea? I think it's a great investment, and is it the right thing?" And he said, "Well, look at it." So I looked at it, and went, "Well, they got you in all these money markets." I said, "Dad, you're losing money every month." And he goes, "What do you mean?" I said, "Well, for the last 3 years, inflation is 5.21%. You're getting sub 0.521%.
Yeah,
So your investment, you're actually losing ground every month. So we got to fix that. This is my inheritance."
yeah,
Which
no.
really isn't much because I'm 7 of 10 kids, so I really didn't worry too much about that.
So using the example of the 105 unit subdivision that you're building, how quick will a project like that, go from first phase? Hey, we're erecting the first house to we're completely sold out. We've done all phases. We've sold all 105 units. Like
So
roughly
that one is an
speaking.
example. We own the land now. We're putting the streets in. We just closed on it a couple
Okay.
of weeks ago. Um, and we should start the first houses in September. And based on our pro forma, we should close the last house in about 4.5 years. So we're
Got it.
anticipating it
Got it.
should be about a 25 unit a year
Okay.
project.
Yeah, fantastic. So for those that want to learn more, Dale, about this opportunity, the offering Centra Capital Partners, where's the best place to get in contact with you, download an offering document, just learn more.
Yeah, our website is fantastic, centracapitalpartners.com. They've got a link if they're interested in how you do the IRAs. If you just want to invest straight, they've got the offerings, and there's tons of information there, some videos or reading that they can do that's about all of the projects, our history of who we are. Are we the right fit partner? There's a lot there that they can.
That's
Centracapitalpartners.com.
got it. And guys, I'll put that in the show notes as well. And Dale, it's been a lot of fun having you, man. I appreciate you coming on here, learning about the company, and got some exciting things happening. And I'm glad to hear that. Just you guys have continued to tread forward, even with the rise in interest rates. And it sounds like while most folks have maybe not hit a wall, they've slowed down. They're going through challenges. Making major shifts within the organization. You guys are making the shifts, but you guys are just chugging forward at the same speed, which is pretty awesome. I love to hear that.
Yeah,
So
I think you said it right on. Every market, there's an opportunity. You just need to go find
yeah,
it.
yeah, exactly. Well, Dale, I appreciate your time, my friend. It's been great having you. Wishing you all the best. And guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.